All right. Well, thank you for having me. I'm excited to share information about health insurance. I know it's a really confusing topic, and many people, um, you know, need to know more about it, especially right now when we have a lot of enrollment going on in the different areas. So, what I'd like you to do, if you wouldn't mind, while I'm talking through some of the housekeeping things, if you would just put in the chat which area of insurance that you're most interested in hearing about. So I'll be talking about under 65 health insurance, Medicare, and then small group. So if you give me kind of a clue of what it is that you want to hear about, I can tailor this more to the people who are here listening. All right, so I'm Karen McCormack. I am an independent health insurance broker, and I do specialize in Medicare. So what that means, as an independent broker, I represent a whole bunch of different insurance carriers, and I kind of tailor things to what people need. So I know a lot about the marketplace, what's in it, who's there, and so that's kind of what I do to help people navigate all of this. I am licensed in 20 states. I have 8 years of experience with Medicare. Started out in 2012. I sold my manufacturing business and needed to have something to do next. And because I dealt with a lot of the administrative functions of the company, I understood insurance, and so decided to go into that. I came from Colorado, moved to the Schaumburg area, launched my business, 0 clients, and never looked back. It's been wonderful, you know, getting expertise in the area, getting to know people, and so here I am today talking to people about what I know. So our agenda tonight, we've already kind of done the introduction. I'm going to talk terminology because that's you know, one of the most confusing things about insurance is understanding what they're talking about. And then I'll go into the 3 different types of health insurance: individual, which is really tailored to under 65 people, pros and cons of that type of insurance; small group, again, pros and cons; and then Medicare. So I've told you a little bit about my story, and I'm looking in the chat here, and I'm seeing over 65 people, and Medicare. Don't see much in the way of small groups. So, you know, that may be something we can kind of gloss over in our conversation today. So where are we today? Right now, we are, let me show you where we are. So I don't know if you guys can hear. And there may be some of you who remember this face, and always remember watching The Twilight Zone and wondering what the hell was, what the heck was going on. We're kind of in that situation with health insurance right now. There's a lot of things going on. It's been good, it's been bad, and there's a lot of interesting things that are going to be happening coming up in 2022, particularly in the under 65 realm. So first thing I want to talk about is the premium. That is the amount of money that you pay for your insurance. That's what the insurance company calls that. Deductible. Deductible is typically something that you have to pay before the insurance will actually do anything for you. Out-of-pocket maximum is the amount of money that includes your deductible and any copays that you have that you're responsible for within a given year. So once you hit that out-of-pocket maximum, the insurance company will pay out at 100%. Co-insurance is usually reflected as a percentage. So you may see that you have a plan that is an 80-20 plan, and that means the insurance company pays 80% and you pay 20%. Copays are usually reflected in the form of a dollar amount. So you may have a $10 copay when you go to the doctor, or you may have a $200 copay when you go to the ER, something along that line. Network. Network is critically important with all insurance, and there is in-network versus out-of-network. Generally, if you're in-network, you're golden. The insurance company is going to pay for things. If you're out-of-network, it depends on the type of policy you have, where there may be some coverage, things may be more expensive, but this is a really important thing when you're searching for insurance, to pay attention to the network. HSA account, that is that stands for Health Savings Account, and that is essentially a savings account that you set up that can be used for specifically for medical expenditures. So it has to go along with high deductible health insurance, and the contributions you make to an HSA are tax deductible, and they're also something that can be contributed to by, like if you have an employer plan. So those are a nice little savings/retirement account for folks. You can keep it even after you're done with it, using it for insurance, and then it converts to a retirement program after that. So HMO, PPO, EPO, that again refers back to the network issue. HMOs are the most restrictive kind of network, where you have to obtain care within the network or it just simply will not be paid for. PPO network is broader, where they have both in and out of network coverage. So you don't have to have a primary care doctor. You can kind of see anyone, just knowing that if you see someone out of network, it's more expensive. And then EPO is something we're seeing a lot more of, and those are kind of a hybrid between HMO and PPO. So you don't have to have a primary care doctor. You do have to stay within the network, but they're just kind of an in-between. Underwritten, that is the word for what happens when the insurance company gets to ask you medical questions, and then they have the opportunity to either accept or decline you for that insurance. Those, you don't see underwritten policies in the under 65 on the marketplace privately. You do see underwritten policies in some other areas, and I'll talk more about that when we're talking about the different areas. Guaranteed issue, that is the exact opposite of underwritten. That means you have a right to purchase insurance from anybody you want, and they don't get to ask you any medical questions. ACA, that stands for the Affordable Care Act, and that is sometimes known as Obamacare or the marketplace, and that's where we see those private policies that the government assists people in paying for. And marketplace is, again, the ACA. Subsidy, that is what otherwise known as advanced premium tax credits. And so that's in the under 65 world, that is what the government helps pay for your premiums. So when you purchase an insurance policy, the insurance company charges what they charge. And then based on your income, you may get help paying for that. And that is in the form of a subsidy. So that is reconciled with your tax return. Thus, it's an advanced tax credit. And that all gets reconciled out when you file your taxes. Okay, so in types of insurance, individually, we have Medicaid, which is state-funded insurance, typically free, but sometimes low cost. There is the ACA or marketplace subsidized plans. Private insurance refers to, it's exactly like an ACA plan, except people purchase that outside of the marketplace and pay full price. Short-term is exactly what it sounds like. It's a policy that is designed for a short period of time, like in between jobs, or if you lose insurance prior to being able to enroll in individual insurance, though, you get that for just a short period of time. Fixed benefit plans, those are, they operate differently than, say, your typical insurance policy where you go to the doctor, you show your card, you have maybe a copay or co-insurance. Fixed benefits pay you. So you go to the doctor, you pay for your bill, and then the fixed benefit pays you a specific amount for those services. An ancillary refers to things like dental, vision, hearing, accident, life insurance, all of those side things that kind of go along with medical. Group insurance are a small group, which in their world is up to 50 employees. Large group is over 50 employees. There's also military, which is a form of group insurance. And then fully insured refers to most insurance that small businesses have, where they're guaranteed issue, there's no underwriting, and you just, if you qualify for a group plan, you just get it. Level funded has typically been for more to the large group market, but it's kind of it's a hybrid, and I won't go into a lot of that because I don't think we have anybody here looking for groups. So I'm not going to go into a lot of that. Medicare, the government provides Part A and B, and I'll talk more about that in a little bit. With the A and B, you can either get a Medicare supplement plan with a prescription drug plan or a Medicare Advantage plan. And then there's ancillary products, again, dental, vision, hearing, those kinds of things that go with or help supplement the Medicare programs. So what is individual? That is for people under 65. When you turn 65, you can no longer purchase individual insurance unless there are specific qualifiers. Most people, when they turn 65, go on Medicare and don't need the individual anymore. It also refers to, it's for self-employed people or people who do not have access to group benefits from an employer. So maybe if you're an entrepreneur, you have your own business, that would be you would fall under the individual category. Individual insurance is for all income levels, from very low income to very high income. And it's offered by private insurance companies. So you purchase it, whether or not you get a subsidized plan through the government, you are going to purchase it through the private insurance companies, depending on what's available, who's offering what at any given time. And a lot of things happening in right now with more and more carriers coming into the marketplace. We're seeing some old faces like United Healthcare offering plans again, and other people like Bright or Oscar who are expanding their offerings. So it's kind of an exciting time where insurance is becoming a little more consumer friendly than it has been over, maybe the last 3 or 4 years. Medicaid is state funded and run by the state government, and that is for people who are specifically low income, and people, pregnant women, children, those people all qualify based on income. So the pro to that is it's free. If you qualify for Medicaid, it's an awesome plan. You can get health care without having to pay what little money you might have. The cons to that, there is often limited networks. You have to enroll in specific plans, and there can be long waits for services. Sometimes it's hard to find doctors that take Medicaid, and certainly they may send you someplace far from your home to get specialist services. So that's kind of the up and down of Medicaid. In terms of individual insurance, so there's the private on exchange and then the private off exchange. The on exchange plans are the Affordable Care Acts, and definitely the pros, one of the biggest pros is the fact that you can get a portion of your premium paid for by the government, and it's in the form of a tax return. So there's not a lot of downside to that. There can be richer benefits on the private plans there's no pre-existing conditions or exclusions allowed. The Affordable Care Act was designed to require 10 essential health benefits. And so these plans have a lot of things that maybe people don't need, but the pre-existing exclusion clause is one of the things that came out of that really helps. Cons, it's a little bit complicated to be compliant. You do have to disclose financial information to the marketplace, apply for the plan, and then they may ask you to provide proof of income, like in your tax returns or W-2s. You have to prove citizenship. There's a lot of things that have to that go into that compliance to make sure you qualify for the subsidy. Enrollment periods are very limited. So we are just starting out in the annual open enrollment period for under 65. That started yesterday on the 1st, and it goes through January 15th. That was just extended. It used to be to December 15th, but now it's been extended to January 15th. So you have to enroll during that time. Once that enrollment period closes, you cannot enroll in a marketplace plan unless you have a special enrollment period. And that means you've lost a job, you've gotten married, you've moved. There's specific reasons that allow you outside of the open enrollment period. But right now is the time that if you are considering changing insurance, or maybe you have to, sometimes the plans, get discontinued, or you see something better. Now is the time that you need to act on that and take a look at those private policies. You have to purchase them through either the federal or the state marketplace. In Illinois, it is the healthcare.gov. But if you live in other states, I think there's about 10 states that have a state-run marketplace. In terms of private off exchange, that is simply this, like I said, the same plans that you would purchase on the exchange, but you're going to pay full price. So you can enroll directly through the carrier and bypass that financial piece. And sometimes people just don't want to disclose information about their finances, and then you end up paying full price. The pros is you get that comprehensive insurance, no pre-existing condition exclusions. But the cons are that there are really limited carriers and networks, and it's very expensive. Because you're paying your portion, and then what the government would pay on the exchange side. And then there are, of course, those limited enrollment periods, and you have to qualify in terms of a special enrollment period, if you want to purchase those outside of the open enrollment. So short-term and fixed benefit, those plans are always underwritten. They have very limited terms and benefits. So these types of plans are a good kind of add-on and sometimes work together to give you more comprehensive coverage. There are better networks in the short-term and fixed benefit plans. And as I mentioned earlier, on the fixed benefit, it just pays out a specific amount. So for example, if you had a marketplace plan that has a $6,000 or $7,000 deductible, you may want to have a fixed benefit plan on top of that. That would help pay for things, up to that $6,000 deductible. And so, for instance, if you had, you fell and you broke your knee, they would pay a fixed amount for, the services that you need for your x-ray, maybe your emergency room and those things until your deductible is met. Sometimes they can be really inexpensive. It kind of depends on where you live, what kind of benefit you need, and then what your age is, because they are, most insurance is kind of age-based. And like I said, they can be comprehensive when you kind of bundle things together to help defray some of the, the expenses of being in a health insurance plan. Ancillary products are like accident, critical illness. You can get dental, vision, travel insurance. And as I mentioned, that really helps with those larger deductibles that we see on the private plans. So, questions about individual. Okay, so I see questions about some questions. Sadia, do you see any questions? Because I don't know that I'm seeing any.
No, I don't see any questions. So, and anyone, please feel free to put in their questions. And if you actually want to ask, on verbally, then you can raise your hand, click on the raise your hand icon, and we can unmute you.
Beautiful. Okay, so if you are shopping for insurance right now, you can go to the healthcare.gov website where you can plug in your information and shop for plans and see what's out there. Now you know a little bit of what to look for, specifically keeping in mind the networks and what those deductibles and those copays are when you're shopping for that. You can go to the State Department of Insurance for more information, and that will help get you to some of the Medicaid. I believe in Illinois it's called ABE. And I apologize, I didn't put that in here, but you should be able to Google the Medicaid in Illinois if you think that you qualify for that. I should also mention, I'm sorry, I didn't do that earlier. If you are low income and you apply for a marketplace plan, they will automatically send your application over to Medicaid if you qualify. And so that would that means you can't purchase a marketplace plan without paying full price, but you will get sent over to the Medicaid system, and that would catch up and give you insurance for free. You can also consult any independent broker. We're all over the place. You can find us. We work for free. We work for the client. So keep that in mind if you need help. All right, small group. I don't think we have any small groups, so I'm going to skip over this so that we can talk more about Medicare. All right, I'm just going to check really close here. Yeah, it looks like we've got more Medicare than not. All right. So Medicare. Medicare is for people over 65 or some people under 65 who have disabilities. The government provides Part A and B. Part A, you get because you have paid into the system. You've worked at least 40 quarters. You get that for no premium. That covers hospitalization. Part B is for all of the doctors. Anything that's delivered outside of a hospital falls under Part B. Part B, you do wind up paying a premium for. And you're also responsible for some co-insurance and a deductible. So really, there's only two options when you go into Medicare. Once you have your Medicare from the government, you can either do a Medicare Advantage plan or look at a Medicare Supplement and a Part D plan. I'll go into more details on those in a minute. Private carriers provide supplemental benefits. And if you have health insurance through an employer and that is less expensive for you than Medicare, then you can certainly keep that. You can delay going into Part A and or Part B. Now that's going to depend on the size of your company if you can delay that. Typically people who work for employers who have less than 20 employees do have to go into Part A and B when they're first qualified. But if you have a larger employer, then you can certainly delay that. Medicare Advantage plans, those are plans where private carriers combine all of the components. So your A and B that you would get from the government, the Part D drug plan, all of those things are combined into a private policy. So it's a lot like the group policy or the private policy you had before Medicare. But there's some cool things about those that I'll talk about in a bit. You can only enroll during specific enrollment periods, just like with the under 65. There are specific times when you can enroll in these plans. Right now, we're in the midst of the annual enrollment period. So that starts October 15th and runs through December 7th. And during that time, you can change Advantage plans, you can change drug plans, you can go in and out of Medicare supplement plans. So you have a lot of opportunities to, to do different things during this enrollment period. There's also special enrollment periods, and that applies to things like, again, like moving, losing coverage. There is an initial enrollment period, and that's where when you turn 65, you have a specific time frame in which you can decide which option you want to go down and get enrolled in those plans. Medicare Advantage plans are network driven. Medicare supplement plans are not. Medicare supplements are any doctor, any hospital anywhere in the United States. Medicare Advantage plans are often zero premium or very low premiums, and then they have a fixed out-of-pocket maximum that you would be responsible for. To go into a little more detail on the Medicare supplements, they are standardized, and you often see an alphabet soup when it comes to Medicare. Definitely, you have plans A through N, and any company that offers one of those plans, they have to do exactly the same thing. Right now, for people who turn 65 in 2020 or later, the most comprehensive plan you can get for a Medicare supplement is a Plan G. If you were born prior to 2020, you can still get into a Plan F. The only difference between those two plans is F covers the Part B deductible and G does not. Sometimes older people have other plans that have also been retired, but typically we see Plan G being offered right now. And then a little bit lower cost alternative is Plan N. Plan N is just like Plan G, but you have co-pays for doctor visits, an ER visit, and you're also responsible for the Part B excess charges. So all of those, depending on, again, they depend on your age, your age, whether or not you smoke, and then where you live. That's how those rates are determined. They're guaranteed issue when you first go into a Medicare supplement plan, and there's other specific, when you go into Medicare, when you first turn 65, or when you retire and get your Part B. Always guaranteed issue at that time. Sometimes there's a whole lot of other rules. Medicare is highly regulated by the government, and I could be here all night trying to tell you what all of the different enrollment periods are. But just say that there are opportunities that you can get it without underwriting. In general, though, once your initial enrollment period is done, then you are underwritten from there on out. In Illinois, you guys are kind of lucky because Blue Cross Blue Shield is a guaranteed issue company. And so you can always move into a Blue Cross Blue Shield plan. We see people sometimes wanting to move in from one supplement plan to another as you get older, and sometimes the prices start creeping up. So it's a good idea to take a look and see what those costs are from time to time. If you're healthy, you can easily move to another carrier. If you're not so healthy, you can always compare Blue Cross Blue Shield to what you have. Medicare supplement plans are any hospital, any doctor that accepts Medicare. As long as they accept Medicare, it goes with. Sometimes I hear people say, I went to my doctor and they take Medicare, but not a supplement. That's not true. If the doctor takes Medicare, they will take a supplement. They go together. Sometimes you'll hear doctors' offices saying that they don't take Medicare, and what they mean is they don't take a Medicare Advantage, because those are, doctors have to opt into those networks. But the supplement side, not so much. And then the Medicare supplements are the most comprehensive. They're quite affordable for say a 65-year-old woman going into Medicare in Illinois. You would wind up paying maybe $120 to $130 a month for your supplement. And that would give you, that's for a Plan G, that would give you a $203 deductible, and then that would be it. So very comprehensive. Part D, you have to have a Part D with your Medicare supplement. It is required. I often talk to people who either didn't know that, especially older people who are in their 70s, don't realize that a Part D plan is required. You will get penalized if you don't enroll in one when you're first eligible. And by that, I mean when you turn 65 or when you retire and get Part B. Those penalties are permanent. They're not horrendous. I just talked to someone today who did not have Part B for 2 years, and her penalty was going to be $8 a month. So it's not horrible, but it's of course not nice either. Part D only covers prescription drugs that you pick up from the pharmacy. Sometimes there are injections, like shingles, for instance, is one that is covered under Part D. But generally it covers just things that you pick up at the pharmacy. And then again, the Part D, you can only enroll in that during the open enrollment period or annual enrollment period right now, or when you when you qualify for a special enrollment period or your initial enrollment period. I do want to go back for 1 second. The Medicare Advantage plans, I did want to mention. I did talk about the enrollment periods here, didn't I? Sorry, I got ahead of myself there. So questions about Medicare. Let me see what I see on here.
Karen, I think there's some people asking about under 65 also.
Okay, very good. Let me see if I can pull up the questions. There we go. Find a list of insurance brokers for health insurance. You know, you can, I would say ask around, ask your family, friends, neighbors. Oftentimes you find people like myself doing presentations at libraries. I'm trying to think if there's any. I do know that you can go to SHIP counselors, but they don't enroll people. They just give you advice. Social media. So you can often find information about brokers on social media. I hope that helps. How do you decide to keep children over 18 on a plan or send them on their own? In general, I like to keep families together on a plan because there are, most plans will only require 3 deductibles. So if you have a family with more than 3 people, or even 3 people, they all contribute to that out-of-pocket maximum for the family. If you pull your 18-year-old child out, they're going to have, you know, their own deductible, their own out-of-pocket maximum. So in general, I like to keep families together if possible. And then that also helps with your subsidy. If you're going to get a subsidy, that's going to be based on your family income. So, you know, so it may, if you have 3 people enrolling in a plan versus 2, you're going to get a bigger subsidy for that. Okay, so if you need Medicare and have a family to insure, you absolutely, that brings up a good point, is if you are in a household where you have somebody who's over 65 and then family members who are under 65, all of those people contribute to helping to get a subsidy. So if you're going to qualify for a subsidy, the person on Medicare, even though they're not getting the policy, helps contribute to increasing that subsidy. What is a subsidy? Subsidy is the amount of money that the government helps pay for your insurance premiums. So say you go to the marketplace and you find a nice Blue Cross Blue Shield plan, and that plan is going to cost you $1,000 a month, but you have a low enough income that you qualify for a $500 subsidy. That means you pay $500 for your policy, and the government picks up the other $500. What happens after that? At the end of the year, you file your taxes and the government says, hey, we paid this amount for your health insurance and you paid this amount, and you file your tax return, and that winds up being a tax credit on your tax return. So hopefully that's enough, but not too much information. Okay, I see somebody's retired, has a Medicare plus Medigap, supporter of Medicare for All. I agree with you, absolutely. Medicare is it's a program that was designed in the 60s. I believe it was 1965, and it's been refined, and it is really a very well-run program. People who are on Medicare know the comprehensive nature of getting that kind of care. Everybody knows what to expect. I think that we could do more with a Medicare type of a program. The under 65 programs right now are complex, and here we are today, nobody outside of, experienced brokers, nobody really understands how it works and what all, what all to do with it. So, yeah, I agree. Medicare for All would be a nice thing. I don't know that we'll ever get there, but we can hope. So there are absolutely insurance companies that cover long-term care. Again, you would want to talk to a broker because those policies are a little complex. Typically, going into a long-term care policy, there's kind of a sweet spot when you want to enroll, and that's generally between, I would say, maybe age 50 and 60, where you're not paying too high of a premium, but you're not paying for it for too long of a period of time. There's lots of great hybrids out there, life insurance that mixed with long-term care. So it's a good idea to talk to somebody about what you need, what you can afford, and where you're at with that. Okay, I don't see any other questions. Have I missed anything?
No, I don't see. I think you covered all the questions, and also in the chat box, we covered, I think, everything.
Awesome. Let me tell you a little bit, a couple more things here. Okay, enrollment periods. As I mentioned earlier, you may want to take a snapshot of this. Your ACA open enrollment right now, November 1st through January 15th of 2022. Once that period closes, then you are in the plan that you're in for the full year, unless you have some sort of a special enrollment or other qualifying event. Medicare annual enrollment period, that's October 15th through December 7th. We're in the midst of that. Again, once you make those changes to your Advantage plans or your prescription drug plans, those take effect in January and will run for the calendar year. There is a Medicare open enrollment from January 1st through March 31st that is specifically for people who are in Advantage plans, and that's essentially for you to move laterally between one Advantage plan and another, or to go out of an Advantage plan and back into a supplement plan. Initial enrollment period is the 3 months before your birthday, and this applies to Medicare. 3 months before the month you were born, your birthday month, and 3 months after. That's where you want to evaluate what supplement or Advantage plans you want to go into and enroll during that time. You only get one of those unless you're under 65. on disability, you just get one chance for that initial enrollment period where you can kind of do anything. Special enrollment periods, I kind of talked about that, moving, losing a job, turning 65. I can't think of any, there's probably a dozen more. And then I didn't mention this because we're not really in the group mode here, but there's a small business open enrollment period between November 15th and December 15th. And that is where a small business can take out a small business policy for their business, as long as they qualify based on the number of employees they have, that they actually can get a small business policy. Then they can enroll without any specifications as to how many are participating and what they're contributing to the plan. So that's a really short window because the insurance companies don't like that. And remember, health insurance is complicated. Brokers are free. Definitely find some help getting, sorting through all of these things. They are more complicated than not. And that is the end of the presentation. I, again, would be happy to answer any questions if there are any more.